Welcome back to Everything Money. As always, we're here supported by our patrons and our subscribers. Paul, we hit 50,000 subscribers. I had a hard time envisioning that this channel could get to this magnitude, and sure enough, it's happened. The Tesla giveaway is happening, and so we're glad you guys are following along and then along this amazing ride that's really altering our lives, and we hope it's altering yours. Today, we're talking about H&R Block. Paul, you've loved this stock for a long time and this company. We did a video in the past. I bought shares. My son bought shares. We're both up 20.
What'd you buy at?
Let me take a look.
I was buying at 13 and 14 bucks last year, and I sold it. Did I get my shares taken away from me at 23 on a covered call? I think that's what it was. I think my shares got taken away from me on a covered call,
I bought
which I was happy with.
I bought it $15.
Oh, great.
So I'm up 56% since we talked about
buying. Well, look at you. Good for you.
And my son bought a little later. He loves this company. He doesn't really know why. He just loves his Uncle Paul. So, okay. But anyway, we're going to revisit this stock. We're going to revisit the company, look at the fundamentals behind the stock price. Is this price still supported? Does Paul still like this? Is it undervalued, or has it reached its endpoint? But Paul, looks like it's got some room to run. We'll go over to Trader Mo, of course. That's going to talk about the trading chart. So, Paul, your thoughts on H&R Block?
So we're gonna use Y charts today. We're doing an update on our Everything Money software right now, but this is the software. It's pretty awesome. I did it in a static state. The bottom line is you'll get all these things, and we'll explain it later. But it has all the data for you, explains it all. So Y charts. Old school, $4.4 billion company, PE of 7.7, check mark there. Profit margin, 40%, check mark there. This is incredible. Dividend, 4.5%, Seth.
And by the way, on their dividend, they announced on Saturday that they're increasing their dividend a little bit.
Oh, really?
Yep.
Is that what this is?
Nope, it's coming through in July.
So what is it, like $180 million a year they pay in dividends? Is that what it is, roughly?
Yeah, it's going to be on.
So remember, folks, free cash flow is how you figure out if they can afford the dividend. Just because they pay a dividend does not mean they can afford it. This is a high dividend. Don't get suckered in. But I think that H&R Block is okay. So let's go to the annual reports. Revenue, $3 billion to $3.4 billion, check mark. But here's the deal, though, Uncle Seth. When everybody look at this. Last year, the revenue fell a lot because they also delayed tax returns, if you remember. And people weren't exactly allowed to go places to do their taxes.
Yeah.
So I think it was delayed. So I think I'd look at these last 2 years as an average of the last, and it's about the same. So it's still a check mark, even though it's a growth. It's about the same revenue.
Still slow growing over the past 8 years, Paul. Okay, how about profit growth, pillar number 4?
408, 583, check mark there. Pretty consistent profit over the last 10 years. You know, last year makes sense. They lost money. Shares outstanding.
What's going on?
I love it. 212, 186. Check mark there.
Great drop.
So they're buying shares back on a very low PE. It's a good thing. They're buying undervalued shares back, theoretically.
How about current assets over current liabilities?
Current assets are 1.7 billion. Current liabilities are 1.163. So check mark there.
Great. Free cash flow.
Now, get your calculator out, Sethy, because we don't have the software. Our software actually calculates this all for you. It adds a little line here that tells you free cash flow. So all the more reason to do it. Are you ready, Sethy?
Unfortunately, yes.
Okay, so 460 to 573. Check mark there.
It's going up.
And then 750, 510, and 27.
Only 27?
Only 27.
Yeah.
Okay. The average free cash flow over the past 5 years has been $464 million.
Times 20 is 9.2 billion.
9.28, yep.
So check mark there, because they're currently selling for 4.4 billion.
Come on.
Right. So they're selling for about 10 times free cash flow. Now, I do have stock analyzer tool working. So after we do Mo on the charts, I'm going to bring up stock analyzer tool on H&R Block to see how much you should actually pay for the stock, because it factors in revenue growth, shares outstanding, etc. I think it'll be very important here to understand what you can make on the stock.
The reason I'm so shocked, folks, is we also did some videos on companies like Tesla and Neo, and the amount of revenue they make versus it's just laughable. And then so lo and behold, little H&R Block has a desired market cap that's twice its current market cap, and they make money.
I think they have a great brand too. Like people, if you said to people, "What's the tax specialist like for everyday people?" What would they say?
H&R Block.
I think so. I think it's got a good brand. I still think that the tax code's only getting more and more complicated, so it's not like they're going away. So it's just, I like it. I mean, it's not going to be a major growth company, but if you can buy it, they buy back shares. That's what we look at the stock analyzer tool. It can be a great investment for you.
I really like what they've done. They've put themselves in so many Walmarts.
Are they really?
They're in all Walmarts. Yeah, they have little kiosks that are right next to the Vision Center or whatever, and right in the front of the store. So.
All right, Mo, tell us what they're doing in the Bidnass Nation, that Patreon tier. What are they trading with this puppy?
I think this is our first group trade as a Bidnass Nation back in November, December, whatever it was. But they reported earnings last week, and their stock price has fallen a little bit. They've turned into a downtrend. So if you do want to do something with this right now, you're getting a little bit of a snapback in price. But if you can get red engulfing candlesticks, take out that previous low of, call it 22.75, and make a little bit of a run. I mean, you don't have much room to go. You see how strong support is right here, dating back a couple of months.
You're saying if it falls, that resistance line is going to halt this.
It's going to halt
and get us another chance going back up.
Exactly right. So even if you get red engulfing candlesticks coming down here, I think you're going to have a lot of resistance right here, and it's not going to fall very far. That's just because of the previous history that it's had. Over the last couple of months.
If you're drawn to charts and what Mo's doing, it may seem confusing. It does take some time, but I implore you to watch the Employed Trader series, which is basically Mo explaining this to me on a very basic level. And sure enough, after a couple weeks or maybe a month or so, now I'm making some trades. I understand. You can see I understand the charts, and not too difficult. In fact, my son understands the charts. and Paul, we're going to have Gio on the show talking charts with Mo to show that a child can trade.
That'd be awesome.
Literally 11 years old.
Following Mo's rules. So, Paul, talk about the stock analyzer tool. You'll get, as a patron of ours, you get this tool. Go ahead, Paul.
All right, so guys, our stock analyzer tool is being updated right now. It's still in development mode. It'll be available to our patrons very soon. But in the meantime, this is the Excel sheet that stock analyzer tool is based on. So guys, this Excel sheet has this is the most desired thing from all of our patrons. They said, how do I get this Excel sheet? It is part of the stock analyzer tool. It is the stock analyzer tool. It shows you the history, asks you for assumptions, because every investment is the present value of all future cash flows, and you have to make assumptions to determine the future because we don't know the future. So I made my assumptions here. I assume revenue growth stayed the same, dropped 20%, dropped 40%. Share buyback stayed the same, dropped 10%, dropped 20%. Profit margin dropped 20%, dropped 10%, stayed the same. I assumed a 10% net present value and a 15 PE. I have a range of stock price between 23.80 and 28.61.
It's currently 24.5.
So it's right in the middle of it. It's towards the lower end. So this says, assuming my assumptions here play out, if I paid today's price, I would make about 10% return on my money on H&R Block. Okay? Now remember, that assumes an aggressive buyback of shares. If the shares do not get bought back at all, it's a lower price. It's between $17 and $22 a share. So it's overpriced right now. Mm-hmm. The share buyback here is the big play. And I'm assuming a 15 PE when it's actually a 7.7 right now. So this is what I love about what we're doing. And for people out there, if you realize that a stock is just based on the numbers over the long haul, this makes sense to you, join us. Understand this. Watch more of our videos because this is exactly what this is. If you think a stock is just a ticker going up and down, I used to think the same thing. Then I grew up. Mm-hmm, all right, I graduated from high school, got a brain, and realized that's not the way it is.
So this is not quite a buy for you at the moment.
For me, it's not. But
what about me? What about a normal kid, an 11-year-old who loves H&R Block?
I don't think it's terrible.
Really?
Assuming these assumptions play out. Mm-hmm. But for me, I'm a value investor. I want to buy at a discount, a major discount to value, because I'm going to be wrong, and I want me to be wrong and still break even or lose very little money. That's my goal as a value investor. Now, Warren Buffett believes value investor is how everybody should be because real investing involves buying at a discount to actual intrinsic value. But I think the intrinsic value in this company right now is around $24, $25, $26 a share. Okay? So if these assumptions turn out correct, you're going to do okay in this company, even with declining revenues. By the way, this assumes declining revenues. This still assumes the company is going to decline its revenues over the next 5 years. Mm-hmm. When it's actually been up slightly over the last 5 years. Very little, but it's been up. So anyways,
that's our take. Yeah, that's our take on H&R Block. We say no to so many. It's nice to see some good numbers to get us close to a potential buy. And maybe this falls a smidge more and it'll get back in our wheelhouse. So, all right, join the Patreon. Tickle the like tickle the fondle that thumbs up on the way out, Paul. You know you love being tickled.
I do.
Like a little baby.
I love it when you and I get together after our fireside chats and you hold me down and tickle my feet and I giggle.
Like two schoolgirls. Yeah. Thanks for watching this video.